Let's talk about the first trade that I took on my new 25K Trader Career Path Prop Firm Challenge from Earn to Trade, where you can get up to 60% off with typing in promo code EddiePips Trading. Let's dive in. All right, so at the current moment, we're actually at all-time highs, which is good. So if we go down to the 5-minute time frame, on the 5-minute time frame, I am waiting for price to close below this series of up close candles here, giving us a change in the state of delivery to hopefully take this down for 2R. We are at all-time highs. We drew out the candle range of the 8 a.m. candle, and we just took that high, so I'm hoping to see some reversal here soon and take this for 2R here. On the 1 hour time frame, we have a rebalance fair value gap, which I do expect price to revisit before it does continue to go higher. If it does, there's also a 15-minute rebalance fair value gap here that I would be watching after I enter this to see if I exit early, depending on if we get consolidation and then a breakout to the upside. But at the current moment, I'm sitting on my hands waiting for price to close below this series of up close candles. If price stalls here and creates a new high right here, I am going to be looking at that series of up close candles to be closed below before I look for sells as well. But it does look like we're rejecting this high a little bit. I'm not exactly sure how price will play out. We are trading above previous day's high, as you can see here. This is the Asian session high. This is the London session high. So you can see it is just absolutely bullish at the current moment. But I want to go ahead and see if I can get a quick scalp here, taking the 8 a.m. Candle range high here down into either the 15-minute rebalance fair value gap or hopefully come down into that 1 hour rebalance fair value gap, which would give us a 2.5% RR. But I'm going to be happy with the 2. But until then, I do nothing. Come on, keep dropping. Keep dropping. Keep dropping. All right, as you can see, we were entered here. We got a long wick tail entry. Got 6 contracts deep in at the current moment. 2 different take profits, same stop loss. Let's see what price does. Let's go. All right, I'm out. I'm out the trade. Nice little move. I expect this to go down if it's already here, but I got my little money. Not sure what's going to happen once it reacts off of see if it reacts off of the previous day high or not, but you can see it is trickling down. My final take profit was at this 1 hour rebalance fair value gap, but we're just hovering at that previous day high, and it looks like it's kind of struggling to go lower, so I just took my money and bounced. So first things first, if you don't know what a rebalance fair value gap is, there is a video on my channel going over the rebalance fair value gap and why I think it is the best fair value gap to trade and the only one that I trade. Now, what we're looking at, what I mark up is Asian session high and Asian session low. That is from 8 p.m. New York Standard Time, so I am UTC -4. So we are going from 8 p.m. until 2 a.m. and then the London session is from 2 a.m. to 5 a.m. and this is Eastern Standard Time. Again, I mark out my previous day high, and then what I start doing is I go on to the higher time frames to take a look at what see if I can see any rebalance fair value gaps. So right here, I saw that we had a 1 hour rebalance fair value gap where a fair value gap was created. Price comes into it, creates a new high, breaking structure, and then once price revisits it, we go ahead and we wait to see if we can get a reaction from it and that other confluences line up. But in this case, I was looking for sells, and I'll talk about why in a second. But this was a kind of a long-term target, you would say, but I expected price to come back down into here. Now, the reason I was looking for sells is because obviously there was some news about the government shutdown, and I just felt to some people it was positive, to some it was obviously negative. So we were trading at all-time highs, and I felt as though that it was just kind of a good fundamental way to approach the market with just looking for shorts, but of course I would have been in longs if longs would have presented itself. But so I start looking for trades at 7 a.m. So 7 a.m. candle right here. On the 1 hour time frame, you saw that rebalance fair value gap. And then if we drop down to the 15-minute fair value gap, there was another. If we drop down to the 15-minute time frame, you can see that there was another 15-minute rebalance fair value gap here. You can see that price created a fair value gap, came into it, broke structure, creating a new high. And once price comes into it, we expect it to take off if confluences meet. So we're trading at all-time highs here. I come to the chart at 7 a.m., which is right here on this candle. This is the candle where I start looking for my trades. My execution time frame is the 5-minute time frame. So now that we have our rebalance fair value gaps drawn on higher time frames, we're going to drop down onto the 5-minute time frame here. And what I did was I saw that we were trading above the previous day high, above Asia high, and above London high at all-time highs. So I felt as though I was just waiting for a short to present itself. And here you can actually see that this was my entry. So again, we're trading above previous day high, above Asia high, above London high, and we're trading at all-time highs. So these are a couple of different reasons to want to look for shorts so because we're trading at all-time highs, I didn't want to just look at the first confirmation for a short. What I wanted to do was line up another confluence, right? So if we go onto the 1 hour time frame, just recently did a 9 a.m. CRT model back test, which did not do well because there was no further context, but it does work. You just need some different context. So here you can see our 8 a.m. candle on the 1 hour time frame. I drew the high and the low of it. Dropping down onto the 5-minute time frame, I actually had price actually came up, took out the 8 a.m. candle high at all-time highs and started to react off of it. You can see here we closed above it, but we quickly snapped back in, closed below the range, and then continued to move away from it. We created a volume imbalance here, and then we went ahead and we closed below this series of up close candles, which indicates a change in the state of delivery for me. And that is actually where I place my entry. So once price closed right here on this candle, I immediately set my limit order at the body of that series of up close candles that took out that 8 a.m. high. And you can see that price gradually went down. I actually exited down here, if I'm not mistaken, around here, because price was just it was just shooting down, and it was trading at previous day high. So previous day high, to me, if you take a look at it, it is not just to frame reversals off of it, but if you take a look at it, there are a lot of times where price will come down to the previous day high or come up to the previous day low and start to react off of it, building liquidity. And then typically it will sweep the liquidity it's built, create a fair value gap on some sort of time frame between the 5-minute and the 1 hour, and it will continue going up from there. You can't see it here, but on the 5-minute time frame, price was coming down and it was actually wicking off of it and then coming back up and then going down and wicking off of it, and it was reacting off of it quite strongly at this time where I exited. But you can see that it quickly went down to that 1 hour fair value gap that we drew up that I showed you at the beginning of the video. And then we ended up ultimately going down to that 15-minute rebalance fair value gap that I showed you earlier. I did not hold this trade, but there are some people that have a little more discipline and like swing trading. So if you did hold this, you could have made out nicely, but I don't talk about if I held it. It's not healthy. But initially, I just targeted a 2R, exited a little earlier because I didn't like what I was seeing where price was reacting off of the previous day high. And that was basically it. But I'll upload some footage of the actual trade, a little fast forwarded, so that you can see what actually happened while I was in the trade. But I traded 6 contracts, made 1%, and then after fees and whatnot, profit came out to about $216, which is just below 1%. which is in my eyes great, and it should be great in your eyes. Trading, you want to make a career out of it, and if you want to make a career out of it, you have to come and approach and treat it like a business. Okay, you can't just come in here risking 3, 4, 5% per trade and wonder why you're buying 6, 7, 8 challenge accounts. Come in with a steady and clear mind. Again, let's talk about why I took this trade. Asia high. I like between 7 and 11 a.m., which I trade. I like to see price come up, take out Asia high, and then give me a sign of reversal. We did not get that because it took out Asia high before we even came to 7 a.m. But we were trading above Asia high, which to me, as long as confluences match up, that is still a valid area to take shorts from. Above Asia high or below Asia low, only if you are going into a higher time frame PD array, which for me, I look for those rebalance fair value gaps. We are also trading above London high at 7 a.m. So right here at 7 a.m., we come up, we take London high, we're trading above it, we're trading at all-time highs, and we're trading above the previous day high. All reasons to why I would be looking to take a short. And then what I did is I waited for the 8 a.m. candle to close on the 1 hour time frame. I marked the high and I marked the low. And you can see that I waited for price to take out that 8 a.m. high. And you can see that we took it out. Price was reacting off of it, would close back below it, came up, closed above it, but then quickly snapped back in, pulled away from it. We had this series of up close candles here, creating an order block. I drew out from the body, extended it out, and as soon as price closes below that, I am looking for a short. I place my limit order right here. Stop loss slightly above the high for 5 points. And then you can see that price came up, wicked me in. You can literally see it right here. Price came up, wicked me in, and then immediately started pulling away from it after it filled this volume imbalance here. All right. And I don't trade after 11 a.m., but this is something that I'm talking about when I say confluence is matching up once you hit a rebalance fair value gap. So here, once we hit that 15-minute rebalance fair value gap, you can actually see that we create a low just before we hit it. We react off of it, creating some buying from other traders. We come down, we take out that low here, we move away, we break structure to the upside right here. This is the high that created that sweep of liquidity here. We close above it, and we would be looking to enter off of the body of that series of down closed candles that took out liquidity. Once price closes above it, you can see price closed above it, draw that out, and you can see that price came in and then started moving away from it. Then you can see inside of this right here is our fair value gap. You can see that price came into it, broke structure to the upside, creating a new high, came back down into it because this is a 5-minute rebalance fair value gap, and then went ahead and then took off. I wasn't even looking at that because it was after 11 a.m., but I just wanted to show you a little bit of what I'm looking at when I am framing a trade. If you like this and want more videos like this, please let me know. This is a strategy that I am currently working on. The backtesting results are looking very, very, very promising at the current moment. If I'm not mistaken, it was an 81% win rate with a little over 30 trades, but I'm still working on it. Don't even want to gas anything up or get too excited until I backtest quite some data. All right, but if you want some more videos like this, please let me know in the comments down below, and don't forget to check out Earn to Trade, where you can earn up to 60% off by using code EddiePipsTrading. Take care.